Alright guys, what's up? It's Ted here with BodiesXWix. It's been about a week since I've done a little video for you. This time I'm just going to go quickly over the ES or the S&P 500 futures for this week. Um, just to give a little overview, we're going to go over monthly, then we're going to go down to weekly, then we're going to go daily, just a larger overview, and go back over what happened last week and compare to see what I said maybe it could have happened from last week transpired to this week, and if it didn't, what could be the cause of it, and what could be, again, possibly happening with this week. So let's jump right into it, shall we? So let's go ahead and head over to the monthly. And let's see here. All right, so at the monthly, as you can see, we still have the breaker up top. Came down, and we're still at about the same place as we were last week on the monthly. It's right there at that um, just above the previous month. Um, it's actually more if you look at the weekly. That is where a lot of the order blocks, things like that, you'll see transpire. As you can see, with the three red candles going down just before the current green candle going up. The first red candle up at the top, that is within the monthly breaker, that is highlighted in orange up at the top. You can see it's actually touching the bottom of that wick. Right, so that is the bearish breaker. Right, so if we get down to the weekly, uh, the three red candles up here at the top of the screen going down, um, with the orange line that says weekly breaker going through it. That weekly breaker is the green candle. Yeah, that would say green candle there. All right, and so watch out for that one. Uh, so as you can see, last week we went up, or last week we went up just slightly. We went up just slightly and touched the median of the weekly the weekly fair value gap. So that fair value gap is in between the large red candle going down. It's highlighted in orange, or an orange rectangle going across. Um, you got, to see here, 1, 2, 3, 4, 5. So in the formation, since I can't really outline it or draw it for you, up at the top you have the three green candles going up, three red candles going down. And then you have the two red candles going up. Then you have five red candles going down, right? And in between those five red candles, the third one is the fair value gap. So in between the second and the fourth candle, right, that is your weekly fair value gap. Now, what was expected was to at least hit the median of that weekly fair value gap, which is called the consequential encroachment, and then start move. I thought it was going to start moving back downwards. However, it looks like we ended the week on that. I personally, I thought we were going to hit it earlier, considering the movement that we had the previous week. But instead, last week it seemed more of a consolidation for the whole week. It went back and forth almost every day. So if we go to the daily, you can see, I can't really zoom in on this one, so that's the daily kind of backed out, right? And so if we go to this one, you can see each day from last week going across. You got 1, 2, 3, 4, 5 days, all basically not moving up until Friday, which made kind of a run up. So what does that mean for this week? To be honest, I am not for sure, because it looks like it did make a pullback into the daily fair value gap, hit the median of that, which would be the consequential encroachment, which is that purple line within the blue line of the current green candle. Uh, or, or actually, I should say yesterday's green candle. You can't see today's candle much at all, since it's Monday, and it has barely moved. But it did touch the median and also touch uh, the previous bullish fair value gap consequential encroachment, but it looks like I touched that first and then ran up. So what we could be looking at, if we go back to this daily here, is we could be looking at the weekly sell side imbalance, buy side inefficiency, which is the weekly fair value gap. We could be looking at that getting filled. So we could be looking more at a bullish momentum moving upward, since that's what we saw at the end of the week, trying to touch the top of that weekly sell side imbalance, buy side inefficiency. Somewhere around, I'm not exactly for sure the price, but let's see here. I pulled it up. We're somewhere around 44.90. 44.90 is the top of that weekly sell side imbalance, buy side inefficiency, which is also overlapping with the breaker, the weekly breaker, which starts at around 44.67.75. Right around there, you should see some resistance. Maybe even a little bit pullback before you start seeing it push up. But it looks like to me that this is all coming in on a bullish motion. So um, if it is not, and it is going to start coming back on a bearish motion, I would say we're going to start. Watch last week's video. I talk about how far it could go back. You should see it on the. I'll go back to the monthly, and we should see it there, probably below where this October low is, or maybe even before the September low. That's where it would actually head to, because that is where you have two equal lows at the same time. So you would have um, sell side liquidity hitting right in that area, and so the price would want to poke through that, if not run through that, to take out anybody that has their buy limits there. And so they would want to run through that and try to take those people out. But it looks like we're having some bullish momentum going forward. And it looks like we'll see. Again, this is not financial advice. This is just my opinion as to what is happening on the market. And we'll see you guys out there and see how you trade. Let me know in the comments. Peace.